Benchmark, the voice of business. Presented by LMD.
On this edition of Benchmark, Murali Prakash, the Group Managing Director and CEO of Ambion Capital and Ambion Holdings, joins us in the studio to discuss the state of business in Sri Lanka today. Then we have an update on investor sentiment and market performance from LMD columnist Hasata Premaratna. And Travis Gomez, Product Head of Frontier Research, wraps up the show with some insights into Sri Lanka's microfinance sector. That's the lineup for Benchmark.
Hello and welcome to the Big Picture Business Program Benchmark. I'm Savitri Rodrigo. Joining us on the program today to discuss the state of business in Sri Lanka is Murali Prakash,
Group Managing Director and CEO of Ambion Capital PLC and Ambion Holdings PLC.
We start off today by assessing the current business climate in Sri Lanka and outlining some of the policy issues that are needed to encourage growth. Murali, good to have you on the show.
Good morning, Savitri. Good to be here. Thank you for having me.
If you're looking at Sri Lanka's business climate, what is your assessment?
Well, I must at the inception say I'm a person in nature, I'm very positive in outlook. So probably I might want to look at things very positively. But having said that, there are two facets to this business climate. One is what you essentially call the economic business climate, other one is the general. Now in general, there seems to be some attempt to get the governance and transparency and all those areas intact and moving forward. So we see some improvement in those areas, which are very welcome moves. But on the economic front, there seems to be a bit of a confidence issue in general. I don't know whether it is a perception or reality, but then perception becomes reality more often than not. If you look at hard-nosed facts, say for an example, if you take GDP as a barometer, the last quarter GDP was something like 1.4, the GDP growth 1.4%. The quarter before was something like 3.5%. As against average growth of 5.2, 5.3 over the last 10 years. So there seems to be some issue with the GDP, but diving deep into it, one could again argue saying this is all due to the unfortunate weather conditions where the agriculture sector performed very badly, which is also true. But the sum total of the entirety of it is that economy has not performed as expected. So therefore, the economic climate in that sense probably is viewed as having been somewhat negative or dampened in that sense.
Now, India is one of those countries that's always looking inward and how it should boost its businesses. For instance, in the ease of doing business rankings, last year or this year, it just went up from 100 to 130 to 100. Sri Lanka, on the other hand, has dropped from 111 or 110, we have gone up to 111, which really shouldn't be happening. In your opinion, what are some of the policy reforms that are needed to add some fillip, add some growth spurts to local business?
I think policy changes are a must for any country or business, because policy changes essentially will revolve around what your strategy is going to be and bring in some behavioral changes. So it is an integral part of any business or governance. But the issue I would like to highlight before going into policies per se is the need to have consistent policies. And frequent changes in policies and inconsistency causes bigger issues than the policy itself. So for the sake of changing policies or frequent changes is not too good. Having said that, there may be many areas, but if I may to touch on a couple of areas. One is the labor. Look at areas like flexi time. I know many housewives who would love to get in for 3-4 hours of work a day. That's all idle labor which can be productively used. But I don't think we have a policy framework to get them into the work arena. Maybe those permanent part-time or whatever you call it. Then there are labor skill gaps. There are labor shortages. Then also there is a possibility of doing better with reverse migration. There are quite a bit of Sri Lankans who live overseas, who are highly skilled, who can come back. So that's probably one area in terms of policy that we should be looking at and be very focused on it. Then if you take another area is, worldwide economies are growing based on technology, the ICT factor. Sri Lanka can be as good as any other country in terms of skill level when it comes to ICT, but I don't know how much we have focused and whether we have developed cohesive policies in attempting to bring in investors in this area, to partner with them, for our people to go out of the country. There are a lot of soul searching that you need to do to take it up to the next level. So two broad areas, and overall I think we need to also create an ecosystem and an environment to bring in investments. So all these three areas probably you need soul searching and more policy reforms in that sense to ensure that we dive into the next level.
So Murali, given the constraints that we are that you just mentioned, what are the sectors that you see promising that we can actually add some fillip to make sure that we see some growth?
Well, apparel is a sector that has done well in the past, and they have done a lot of value addition, so I think they'll continue to grow. But quite apart from that, what is already existing, I think leisure and tourism is a sector that can grow leaps and bounds. Unfortunately, we have not seen that growth for many decades or years. So that's a sector that if we position Sri Lanka proper as what it should be and promote Sri Lanka, I think that's a sector that is waiting to grow in great proportions. Quite apart from that, I still feel retail as a major sector. Not because I was involved in retail some time back, but if you look at all the countries in Asia and around us which are considered tourist destination, you take Thailand for an example, Singapore, Dubai, Malaysia, Indonesia, there is that element of shopping that comes in, and we can be an equally good shopping destination to this part of the world, from Middle East to our neighborhood, East Asia, the whole lot. So I think we have the potential if we once again plug it in well with the way that we are going to position the country. I think there is quite a lot of hope to improve on that sector.
Unemployment stands at 4.2% in 2017, but has increased to 17.8% among 20 to 24-year-olds, which is the graduate level student. How can employment be ensured for graduates, for instance, and how can they be brought into the workforce and kept there in a sustainable manner?
A bit of a difficult task as things are, but let me take this question in three different areas. One is what are the areas that people choose to study in? Everything starts with that. If you look at where the world was 10 years back and where it is moving over the next 5-10 years, it's quite different from what we saw 10 years back to what it would be very likely going towards. So there is a requirement for people to understand and be in line with where the world is moving, so that when you graduate, your employability will be much better. So there is a need to have, say, career guidance units and that kind of a thing at high school level. During the last year or two, there are enough private sector people, government sector people, academics throughout the length and breadth of the country. If we coordinate well through maybe the regional education or whatever, give them that advice as to where things are moving so that they'll make that wise choice. So that is the starting point. Then of course, your final year as a graduate, you need to be sure that your employability is taken into account. So that is all about marrying with the business world and getting to know that better. So I think we probably might want to relook at a mentoring program or finally a mandatory internship program where it is mandatory for every graduate to go through this program, understand the business dynamics and get inculcated into that environment, and probably in the melee hone their skills well so that when they come out they'll be ready to be employed. So, two areas among many other things. The third factor probably is a bigger issue where majority do not go to the universities. Now, when they come out, they have a very different problem as well. So, once again they tap at the job market, but if you look at, we do have vocational training, many of those institutes all over mushrooming up, but there is no proper national policy as I feel it. If you take countries like Australia, I mean, they have a thing called the TAFEs. They are as good as the universities. People don't worry even about going to the universities. They simply go and do a certificate course, diploma, advanced diploma in TAFE. And some of these people, when they come out, they earn much more than a business undergraduate. So, if we can have one cohesive policy and somebody to take over this and drive, then I think, once again their employability also will be far greater. So, probably three areas that we could look at.
Well, you've piqued my interest, so we're going to delve a little bit further into the how we are we're seeing state of business in Sri Lanka, Murali, after the break. Coming up after the break, Murali Prakash talks about the challenges Sri Lanka has to overcome to become a high middle income country, and also we ask him to expand on how Sri Lanka can leverage on partnerships with other countries to promote development. Do stay with us.
When we entered the industry in 1995, a new star was born as a fully owned subsidiary of People's Bank. For those seeking to grow their businesses, PLC provided the seed. We are not only Sri Lanka's #1 leasing company, but also the largest non-banking financial institution. Welcome to a new dawn for the nation. Introducing People's Leasing and Finance, PLC.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
$8,500 done. 1,500 to go. Hoorah!
What on earth are you doing?
I'm making money.
You're crazy.
Crazy for money. 10,000 steps done. Who the man? I do it every single day. Show me the money.
So you run 10,000 steps every day, huh? You must be fit.
Some days I do 20,000. Hoorah!
Thank you for tuning into Benchmark. We now return to our discussion on the state of business with Murali Prakash,
Group Managing Director and CEO of Ambion Capital PLC and Ambion Holdings PLC.
Murali, just looking at Sri Lanka, we've always had high ambitions, which is a good thing. To become a high middle income country, what are the challenges we need to overcome?
Let's first see what is a high middle income country. Currently, I think our per capita income is something like $3,800. So high middle income country means you will have to minimum double the current per capita to get into around $8,000 or probably even close to 10,000. Now, it's like this, Savitri, if I may bring in a crude analogy here. If I have a family of 5 and if I'm earning 5,000 rupees, my average family income is 1,000 per capita. If I want to take it to the next level and if I want to double it, I have to do something to earn 10,000, so it becomes 2,000 per head. Or I might just do a little bit more and earn 7,000, and my spouse starts working and earns 3,000, then the average becomes 2 again. So something similar. So if we are to improve the per capita, if we are only center driven, only one or two industries are driving, it is that much more difficult to achieve the average. So one thing that I would like to state is we need to improve the infrastructure where the so called industries and business is taken to the grassroots. The second thing is efficiency. Whatever that we are producing today should be produced much more efficiently so that the output is far greater. So one way to do that is the technology. Now, if you look at countries like Israel, I mean, what do they have to do well in agriculture? Nothing technically. But they are an agricultural marvel in that sense. You know, it's the use of technology that has enabled them to be where they are now. Third issue I see is our exports are primary in nature. As I said before, the labor that we export is very primary in nature, again low value added exports. If we can improve that, say for example cinnamon, other than cassia, the real cinnamon, I think Sri Lanka exports about 75% of the world requirement. But I believe that majority of this is in the primary form. We don't add value. So exports, we need to add value. Probably that's another important aspect. Just like what the garment industry has achieved, we need to add value, and that will bring us more output. So probably some of these areas will help us to get to the next level.
Now, 2017's GDP was a slow 3.1%. There's no question we have to start improving our GDP. What do we need to do?
Okay. Once again, let me in a very subtle way put what GDP to me is all about. Say for an example, if I have 4 products that I achieve X amount of revenue, if I want to go 2x, either I'll have to sell these products twice, or I'll have to bring in new products and services to add to that. So GDP is something like that. We are currently at 3.1 or whatever. If we have to go to the next level, then we have to ensure that the current sum total of goods and services, what we call the GDP, goes to the next level in terms of output. I would like to bring in what you call the total factor productivity into this. Very on a very elementary basis, what it means is 1 plus 1 is not 2 but 2.5 kind of a thing. What you do in between to enhance the inputs so that it produces more output. So the human capital development towards that will ensure that your productivity is far greater than what it was in the past, and along with that the efficiency will ensure that the cost is also reduced. So that way you can ensure that whatever we have been producing now is produced much more efficiently and more into the future. Secondly, we have to add new avenues of production to increase this GDP. So that is to encourage investments both locally and from overseas, so that they can come and start new industries or bring in new things that can be consumed locally and overseas.
Do we create an environment to spur entrepreneurship? For instance, there's a lot of rhetoric about getting the best potential out of entrepreneurs, that there should be low interest schemes. As the Minister of Finance rightly pointed out, we need to tap into that potential. But how do we actually get this entrepreneurship spirit sorted?
I'm glad that you asked that question. World over, if you look at over the last couple of decades, things have been moving purely due to entrepreneurship. The best of the products, services that we know have been created by entrepreneurs. Even in Sri Lanka, if you look at what have been happening over the last 10 years, entrepreneurs need many things. You will have to have a proper ecosystem surrounding to develop entrepreneurship. One of the things is they take a lot of risks, so you need to have those safety nets built so that they don't feel bad in taking such risks. Two broad areas that I see. One is the access to funds. Now, entrepreneurs can come up with the best of the ideas. They are willing to put themselves into those ideas to take it to the next level, but they need funding. There are entities like Angel Network and some private entities which support them with the seed funding initially, but that's woefully inadequate at a country level to bring entrepreneurship into the foray. And look at the crowdfunding. I see all the time millions of dollars are created world over within a couple of days. Here somebody has an idea and you only need 5,000 people to contribute 1,000 rupees each to get that seed funding of 5 million, and off he goes to chart. But then we don't have the policy framework. By the time we come, I don't know where we will be as a country. So we need to hurry up and get on with these things.
Sri Lanka has signed an FTA with Singapore, among other countries, and also having talks to strengthen ties with countries like Ethiopia, Serbia, Iran, Indonesia. How can Sri Lanka actually leverage on the strengths of other countries as well as ours, putting it together to promote development?
Well, partnership is a give and take. We have to understand that it's not a one-way movement. So when we ask for something, we might have to give something back. If you look at the world trade, more than 50% of the world trade is due to these partnerships, trade agreements. So we can't get away from the fact that if we are to move ahead forging partnerships, trade agreements are a way to go ahead. Now I do understand and accept that we have to build in certain safeguards for our own sake and for the country's sake. That can be done. But having said that, we have to move on and ensure that we build in partnerships. We are a small country, just a market of 22 million people. But the neighborhood has 1.7, 1.8 billion. That is what we should look at if we want to go to the next level. So that essentially means free trade agreements have to be looked at very positively, and we have to move on with that very fast.
We need to pull our socks up, don't we?
Absolutely. That, having said that, yes, it is a mandatory requirement, I think.
Thank you so much, Murali. Thank you.
Thank you very much, Savitri, for having me.
So we've been discussing the state of business in Sri Lanka with Murali Prakash, the
Group Managing Director CEO of Ambion Capital PLC and Ambion Holdings PLC.
On the other side, we have Anushan Selvaraja with more.
Sri Lanka's #1 leasing company is now the nation's largest and highest rated finance company with 2 international ratings. Let us move the nation as one with People's Leasing and Finance PLC.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
Done. 1,500 to go. Hoorah!
What on earth are you doing?
I'm making money.
You're crazy.
Crazy for money. 10,000 steps done. Who the man? I do it every single day. Show me the money.
So you run 10,000 steps every day, huh? You must be fit.
Some days I do 20,000. Hoorah!
Welcome back to the show. I'm Murali Prakash. Now for a closer look at the latest on the bourse, joining me is market analyst and LMD columnist Hasna Premaranthi. Welcome back to the show, Hasna. Now, as usual, to start off, how is the bourse performing at this point in time?
Things have not been too positive. I mean, we have seen various events in the last few weeks, which has led to the oil share price index coming down to 6,300 levels, which in fact has been a decline of about 100 points in the last few weeks. This decline primarily is driven by the local political uncertainty and the type of the investor sentiment that's currently prevailing in the local market. But having said that, it's also equally influenced by the global situation, where we've seen a lot of uncertainty among the investor community due to the political developments that's happening in the global front, especially with US and China having a significant debate around how the trade sanctions or trade import duties need to be structured. So in that light, we've seen global markets, including the US stock market, coming down significantly, and similar impact is seen in the local market as well. So it's a mix of both the local and the foreign uncertainty in the political and the broader macro front that has been contributing towards the negative sentiment in the market overall.
Right. Do many listed companies in the country opt for raising debt through the capital market? If so, what are the pros and cons of this?
Yeah, I think the main advantage is that you get access and liquidity, and also you bring the ability for an investor who put that money in a longer term debt instrument to sell and cash in during the middle of the period of that particular instrument. For instance, if you invest in a 5-year corporate bond which is listed, even in the second or the third year or even any time, you have the ability to sell and cash your money. It might be at obviously a lower price, or it can be at a better price, but either way you have the liquidity advantage. Now, looking at that as a positive sign, the other side of the story obviously is that when a company come to the market to this, there will be a series of areas that they'll have to follow in terms of the regulations and stuff like that, and the yield that have been coming in terms of the interest rate has been somewhat in line with the market, and today there is a lot of excess liquidity in the market, so there have been also a banking system which has been funding as well. So I think why we have not seen too many debt instruments coming into the market is because there has been liquidity in the marketplace at large, and bank funding have been available, and so most of the banks who have come to the market to list their debentures and the bonds, given that their capital adequacy requirements are being tightened by the central bank.
So it's been a rough and tumble year, with a lot of strikes and political instability. What do you see for the second half of this year?
I think the uncertainty will continue. Obviously, we are not seeing any positive progress from the political conversation in Sri Lanka with the two main political parties who's governing the country. Will continue, likely to continue, and they will likely to have the different viewpoints and opinions, which will create more and more uncertainty from an investor perspective. But having said that, there will be a lot of development that's happening in terms of the bigger projects, in terms of the Hambantota port, in terms of the Colombo hub, and in other construction, the central highway, all these developments on the road network is happening. So with this and some of the manufacturing projects that have been also kicking in, there is growth that you're seeing, underlying growth that you're seeing, which probably not materialize into numbers in the immediate term, in the next few months, but of course we'll see more positive light in the next 2 to 3 years, because some of the fundamental corrections that have been done to the economic structure will only pay off in 2 to 3 years, not now. So there will be a short-term lull. You're seeing the economic growth at 3.2-3.5% range right now, but I think some of these structural changes will start giving positive results in the second to the third year. So that's why longer-term fundamentals still stand positive.
Thank you very much for joining us, Hasita.
Thank you.
That was market analyst and LLB columnist Hasita Premaratne. We'll be right back after a short commercial break. Stay tuned.
When we entered the industry in 1995, a new star was born as a fully owned subsidiary of People's Bank. For those seeking to grow their businesses, PLC provided the seed. We are not only Sri Lanka's #1 leasing company, but also the largest non-banking financial institution. Welcome to a new dawn for the nation. Introducing People's Leasing and Finance, PLC.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
Sri Lanka's #1 leasing company is now the nation's largest and highest rated finance company with 2 international ratings. Let us move the nation as one with People's Leasing and Finance PLC.
Welcome back to Benchmark. I'm Anushan Selvaraja. Now we're going to take a look at the microfinance sector, and joining me is product head from Frontier Research, Travis Gomez. Welcome back to the show, Travis. Now, there is a lot of interest building up in the microfinance sector. What are the reasons behind this?
Yeah, so if you take microfinance, when you say microfinance, essentially this is lending to, I mean, what we'd call the poorest of the poor, basically the people who are unable to access more conventional ways of borrowing. So if you take in terms of the players who are in microfinance, so you have like banks, finance companies, and even these, the people who colloquially we call like the polymudalali type of people. So more recently, what's been happening is there's been growing interest in these sectors, particularly by the conventional finance and the banking sector, because this is seen as a very lucrative industry. So in the past, a lot of the banks, their focus was on the pawning sector, but then after the gold prices fell, they kind of moved away from it. Then again, then they started to get into vehicle leasing, but then again with the tariffs, that sector also fell. But so now they are looking to very heavily go into lending to the microfinance sector. So a lot of the banks, they have set up separate units which are focused on this microfinance. So based on based on some of the data that is out there, if you take the size of the industry in terms of the loans, it's approximately about 70 billion. So at the moment it's quite small at the moment, but the important thing is, or why it's important, is that we are lending to a lot of very vulnerable people. So because of that, when there are these issues, there can be a certain ramification. So it's definitely a sector to watch out for.
Right. Now, Travis, there is also this issue of increasing household indebtedness. Now, when there are a number of companies going into the microfinancing field, offering microfinancing options, there's also this trend where people are just rolling their loans. They're getting a microfinance from one place and then they're rolling with another. So what do you have to say for that?
Yeah, that's exactly an issue that is there right now, because now, I mean, if you and I go to take a loan, I mean, there is some, you have to be part of the CRIB system, basically, if you've taken the loan. So there is some information out there in terms of how much you have borrowed, what are the limits, and when it comes to banks also, there is stringent regulation on it. But the thing with microfinance is at the moment it's still mostly unregulated. So because of that, there isn't really any guidance in terms of given to how much you can lend, what it's all like the lending caps, even the caps in terms of the interest rates, because those can get really high as well. So at the moment, that's the danger that we face. There isn't really any control. So as a first step, the central bank has introduced a new Microfinance Act. So that was introduced in 2016, and what that requires is for basically these private companies that are involved in microfinance to be registered and to be part of the system. But at the moment, I mean, the focus of the act is still very much on getting those people into the system and getting people to register. So there isn't really much done on in terms of looking at protecting the household and making sure you're not over lending to them. So this is an area that the central bank is also quite worried about, because some of the recent surveys they have done have shown is that the household, basically the debt levels have gone up. So in 2016, I think one stat that was put out was it's about per household it's about 375,000. So it's not, if you look from a global context, it's not that significant. But what's happening is that the lending to a lot of these vulnerable sectors, particularly when you come to the north and the north central province, particularly these agriculture areas like Anuradhapura, the debt levels over there is much higher than the national average, and these are the people who are typically targeted for microfinance. So so because of that, there has to be some regulation that needs to be put in place.
Is microfinance being used for the purpose it's supposed to be used for in Sri Lanka?
when it comes to microfinance, what you should understand is that it plays a big part in terms of boosting the economy and actually improving the livelihood. So if you take a lot of case studies, these successful case studies like what happened in Bangladesh with the Grameen Bank and all of that, is that if it's done right, it has a tremendous impact because you're lending to the people who are really in most need of this. So, but some of the studies that have been done in Sri Lanka, what they found is that a lot of the lending that is done towards these people are not really for for the purpose of like starting up their businesses and for improving their businesses. A lot of it is really consumption driven. Either it's because they have some emergency and they are short on cash, or in the worst extremes, it's like things like you want to have a more lavish wedding and things like that. People are borrowing for that. So that kind of borrowing is it's not really going to improve your livelihood, and you're just going to get trapped in those cycles of debt. So there has to be so similar to what the banks have, where there is like a stringent process where the bank goes through checks and balances to see whether what are you going to use these funds for. So I think a similar system also needs to be in place when it comes to microfinance as well, to make sure that you're not over-lending.
So basically what you're saying is that due to its unregulated nature, microfinance is essentially in Sri Lanka becoming more like loan sharking, right?
There's the danger of that happening.
Thank you very much for joining us, Travis.
Thank you.
That was product head from Frontier Research, Travis Gomez. Thank you for watching Benchmark, and we hope to see you again next time.